Good morning, everyone. In the interest of securing as many participants as possible, we'll give it another 2 minutes. There are still many members that are joining, and we'll start promptly at 2 minutes past 11. Thank you. Okay, once again, good morning, everyone, and welcome to, I guess this is the first of the Let's Talk SARS series. This one in particular is hosted for TEPA members. It's the first of a series that we're going to be hosting. Of course, the very first session will be focusing on just a high-level overview of SARS requirements, and exactly what is your role as business leaders in terms of honoring those requests. With us today, we have a representative from SARS, Martin Naidu. Martin's role is he's a service consultant within the education department of SARS on the tax broadening side. This is part of an ongoing education series, like I mentioned previously, where we bring critical stakeholders to you directly to industry so that you are able to engage firsthand, to be able to ask relevant questions, etc., etc. Just from a process point of view, what we will do today is we'll allow Martin to run through his presentation. Like I said, this is a series. There's going to be at least 5 of these, broken down into different elements, and we'll share those elements as we proceed. But Martin will go through his presentation. If you don't mind, keep all questions to the end. You can raise questions in the chat box during the presentation, and we will address those questions at the end. Beyond that, at the end, you'll have a chance as well to raise your hand and ask direct questions to Martin. So from a process point of view, that's where we're at. I will immediately hand over to Martin Naidu, who will then take you through the presentation. And of course, like I said, questions at the end. Over to you, Martin.
Okay, thank you, Vishal and team. Can you hear me clearly? Get a thumbs up on that.
Yes, we can.
Thank you. Okay, I'm not going to keep my camera on just to ensure that we have quality of the presentation. And I'm just going to share my presentation quite quickly as well. Okay, so good morning. So we're still in the morning phase. Let me introduce myself. Thank you, Vishal, for the introduction as well. My name is Martin Naidu from the South African Revenue Service, part of a division called Tax-Based Broadening and Taxpayer Education. Today, I'm joined with my colleague Tulin Tun. We're based in KZN, and the key aspects of our unit specifically is to ensure that we maintain the current tax base in KZN, increase the tax base as well, and also provide free tax workshops to taxpayers so that you all actually understand or know your obligations. As small businesses, we are expecting that you should have already know what your obligations are, but depends on the industry that we deal with. Some of you all have accountants, bookkeepers that you'll deal with, but are you actually aware whether your accountants, bookkeepers are actually assisting you and ensuring that you are compliant when it comes to SARS itself? SARS itself, we have 9 strategic objectives. We as SARS can make, or as a department, can make impact to 3 of them. We can provide clarity and certainty. We can ensure that there's simple way to comply. And this is by modernizing our SaaS systems itself. And if we're giving you the information, we're giving you the systems for you to comply. When you do not comply, that's when SaaS will make it hard on you, right? So today we're just going to look at what the small business, what are your obligations as a small business? What are you required to do? There are incentives that are available to small businesses as well. And if you're not aware of it, we're going to actually cover that as for you today as well. Then we look at your smaller micro businesses. There are a lot of businesses that are running like below the radar. There is also incentives like turnover tax that's available for you. And then we'll look at what are you required and why is compliance so vital when it comes to your business itself. So let's look at the small business as itself. Most of you might have registered PTYs or companies, right? So just to look at the value chain when it comes to registering a business itself, your first step, or most businesses or existing businesses would have started off with CIPC. Now, once you're registered with CIPC, automatically your business becomes registered with SARS. We issue out an income tax number. Now, what's very important when you are registered with SARS is to ensure that you'll update your registered representative. Now, a registered representative can be an accounting officer, a public officer, or a director, but there has to be somebody that is actually linked to SARS as a representative. Reason being why we are stating that is that we need to ensure that the person that we deal with on a regular basis, the person that we contact, is the person that is ultimately responsible for the administrations of the company. All right. So if it's yourself, then we will contact you directly. Now, another reason why you need to update yourself as a registered representative is to make sure that if you want to access the SaaS digital platforms like e-filing and you want to submit tax returns or activate tax returns or update details, this is only provided to as long as there is a registered representative that's linked on our SaaS core tax system and that's been activated on e-filing. So it's always advisable link yourself or update your registered representative. If you have changes of members or public officers, you need to inform SARS within 21 business days. That goes to also updating of contact details, addresses, banking details. Okay. So updating of information also forms a key aspect of compliance because when we need to contact someone or we need to issue out correspondence, we will only issue our correspondence based on what SARS has on our systems. So updating of information is vital for you in a small business itself. Now, for a company, you are required to file 3 tax returns in a year. Okay. So how the company normally works, you'll have a financial year end. Your financial year end is dependent on what your company registration document stipulates. So your 14.1, 2, and 3. So example, if you have a February year end, which means your financial year starts in March and it'll run all the way to February following year, and that would be your 12-month period for your financial year. For example, from the 1st of March 2026 up until the end of February 2027. That will be your 2027 tax year. Now, in this tax period, you are required to submit tax returns. Okay, so you've got your provisional tax returns. Now, what I'm just giving you now is a just an overview of what you are required to do. Like, provisional tax for us is a complete subject on its own. It's a complete workshop on its own, right? But to understand provisional tax, we need to go in depth to it. But I'm going to give you an overview when these returns need to be submitted and why you need to be submitted. Okay. For example, I'm a salary earner. I work for an employer. Every month, my tax is getting deducted as PAYE and paid. So I'm not physically paying my taxes to SARS. My employer does it for me. But when it comes to a business, now a business doesn't need to pay tax every single month. The tax that you will be paying will be forming part of what we refer to as provisional tax. These are what we call a additional payment or projected payment, because all you're doing is you are estimating your income for the year. You're paying that income within the first 6 months. That means your first provisional tax return would be done maybe by end of August. That's the first 6 months. That'll cover your periods from March till August. Then your second provisional tax return will be needed to be submitted by the last day of your financial year, which will be the 28th of February. So those two tax returns, the first period and second period provisional tax, is merely covering your advance payment because you are paying your taxes for your business in advance. Then you have what we refer to as the ITR 14 return, which is your third tax return. Okay. The ITR 14 needs to be submitted within 12 months from the end of your financial year end. So you got 12 months to submit the ITR 14. Now, the ITR 14 is a financial return. This is where you're going to use your financial information, your financial statement, your income and expenditure, and you're going to complete this tax return and needs to be filed. So when you file your ITR 14, what you are basically doing, you are giving us a detailed breakdown based on your financials, the amount of income you earned, the expenditures that you had, and what type of expenses that you incurred, right? And that's how the system will automatically determine whether one, you made a profit or you made a loss. Now, if you made a profit, then the tax on the profit, when you are considered as a normal company, your flat rate of tax is at 27%. All right. Now, say for example, you submitted your first provisional tax return and you submitted your second provisional tax return, and you've determined that, for example, that you know what, I might have paid less tax. Okay. You haven't submitted your ITR 14s as yet. You have which we call a top up payment, a third payment, right? And that payment is normally within 7 months. So by September, you need to do a top up payment. So this is just to say that I've miscalculated on my advance payments on the first and second period, and I'm going to do a top-up payment just before I file my ITR 14 return. Okay. Once your return is submitted to SARS, you will receive what we call is an assessment form, an IT-34, right? That will give you a breakdown whether based on the information you've declared on your tax return, whether you are owing SARS or whether SARS owes you. What will generally happen is when the assessment is done, whatever tax we calculate on the assessment will be set off against the provisional tax that you are required to pay. Now, remember, you will be paying tax on profit, which means your income less your expenses is the profit that you will. If you are making a loss, by all means, you won't pay tax. So, one thing you need to understand is that even if you're running a business, a loss is not a bad sign that your business is doing bad. A loss will basically mean you can have a loss and declare a loss. You won't pay tax, but there's something called ring fencing that you'll need to look at as well. It's because you could have a loss in the first year, you could have a loss on the second year, and in the third year, you had a profit. So the losses that you had in the first year and second year will generally be set off against the profit that you had on the third year. Now, one other thing that you need to understand is that These are obligations that you have with SARS directly. Okay. Even if your business is trading or not, you're still required to submit these tax returns to SARS. All right. But you also have an obligation with CIPC to update your annual returns and make payments to them. Failure to do so, they will deregister you for on the CIPC on their records, and they will inform SARS that there's and a pending deregistration. Although you are deregistered with CIPC, it does not mean that you get automatically deregistered with SARS. Your tax number will still remain active. We can only deregister once CIPC gives you a notice of registration. Once you have filed all your returns and brought up to date, then based on that notice from CIPC, we will deregister you. Okay. Then we have employees tax. Now, PAYE is based on, remember, firstly, as a member or director of your company, you are the first employee of that company. All right. And if you are drawing a salary or if you have any employees that are also drawing salaries, okay. And if, for example, you are paying a salary where it's above the tax threshold. Now, a tax threshold is generally set based on an amount where tax should not be deducted. All right. So, for example, we are currently in the 2027 tax year. So, from the 1st of March this year up until February next year, right? If you have any individuals, all right, that's you are paying a salary that's less than 99,000, and these are individuals up to the ages of that's below the ages of 65. Now, if they're below the ages of 65 and it's 99,000, the 99,000 is for the year itself, right? That means from March this year to February next year. If you had to break that down into a monthly salary, it comes to about 8,250 Rand per month. So what are we saying is that if you earn less than 8,250 Rand a month, there will be no tax deducted from that amount. But as soon as you go more than that 8,250 Rand per month, all right, that tax can be that the tax range will be anything between 18% up to a maximum of 45%. Then that's where we look at
Yes,
the term.
Alex.
Okay, sorry, can we mute that person? Okay. All right. So anybody that earns above that amount. So as soon as you have established any employees that are earning above the tax threshold, inclusive of yourself, if you're drawing a salary from the company, you are then required to register with SARS within 21 business days, um, and, and you can do that registration on e-filing by using the RAB01 form. Okay. Once you are registered with SARS, okay, you will be issued out with a PAYE number. When you register with SARS for PAYE, you get an automatic registration for UIF. And if you meet the requirements for SDL, then you'll be registered for SDL as well. Now, on a monthly basis, you as the employer, you have an obligation. You have to, on a monthly basis, either put through a payroll system or run manual calculations on the employee's tax that you're going to be deducting. So for example, for each employee, you are going to work out whether they will be PAY deducted from their salary or whether they'll be UIF and whether the UIF and SDL. Okay. Now, when you register with SARS for PAYE purposes, you get an automatic registration for UIF. So what SARS does is we become a collecting agent for the Department of Labor, right? So you'll pay the PAYE, the UIF, and SDL via SARS, and we will then move over the money over to the Department of Labor, the UIF amount. But you also still have an obligation with the Department of Labor to inform them. I think the form is called a U19 form. You can do that online, but you still have to inform them that, okay, this month we paid so much of tax to SARS for UIFs, for example, and this is the breakdown of the UIF. So you'll advise them the employees the UIF belongs to. So that if your employees, for some reason, leave or exit your employment, then they can go ahead and claim the UIF from the Department of Labor. So you have that obligation as well. Also, as an employer, you are also obligated to provide your employees with salary advice or wage slips, because you need to advise them, this is your income that you received, this is the tax or UIF that I've deducted from you. All right. Also, you have a requirement to issue them out with an IRP5 or IT3A certificate. Okay, so we'll get to that now. Now, every month, as an employer, you are required to deduct the UIF, PAYE, and SDL, right? Now, when you deduct that, you pay that over to SARS via an EMP 201, which is a declaration. And right, that EMP 201 needs to be filed monthly. It needs to be submitted before the 7th of every month. If the 7th falls on a Saturday, Sunday, or public holiday, it needs to be submitted by the last business day. If you file the tax declaration any later than the 7th, then whatever your liability was to be paid on that, there will be a 10% penalty on it. Okay. The further that than that, you as an employer, e- every month you are deducting your UIF, your PAYE from your employees. All right. Now you need to reconcile that with SARS. So you do what we refer to as an EMP 501. Now the EMP 501, there's a biannual submission. That means it'll cover the first 6 months of the financial year. That means March till August. And then you got a final reconciliation that covers the 12 months. So what you are doing on that is you are creating your IRP5 certificates, and those IP5s are specifically for employees where PAYE was deducted, or IT3A certificates. These are for employees where no tax was deducted, but there was UIF. All right. Now, one thing you'll need to understand for as employers, if you are already registered for PAYE, please note for the 2026-02 EMP 501. That means it covers the period from March last year to February this year. It is mandatory that all employees have an income tax number, and it's on your declaration itself, right? Now, having a tax number does not mean that your employees are going to be liable for tax. Remember, I spoke about the thresholds. If that employee is below the threshold of 99,000 for the year or 8,250 for the month, then there will be no tax deducted, but there'll be UIF. But it is mandatory that they are in a possession of a tax number. Now, you as an employer can help your employees, for those that don't have a tax number, on the easy file system and the e-filing system, to register them for income tax numbers and also to request for the income tax numbers online. So you don't need to send your employees to a SARS office, give them a day off, and ask them to get a tax number, right? If, for example, they registered and they have a valid cell phone number and email address that's matching what SARS has on their system, then they can go online and they can request for their tax numbers via our WhatsApp lines, via our USSD or a SaaS online query system. Okay, I'll cover that those information at the end. All right. Say, for example, you cease to trade, you're no longer an employer, companies is going to be closing down. You are going to be required to deregister for PAYE. But before you can deregister for PAYE, you'll need to make sure that all your EMP 201s are up to date and all your EMP 501s are up to date. Okay. If you do not submit your EMP 501s by the required due date. So normally your reconciliations have a timeline. So for example, the tax season for employers for the 2026-02 period, the EMP 501, that declaration needs to be submitted by the end of May. If you do not file your return by the end of May, SARS will issue out a 1% penalty according to your PAYE liability per month, up to a maximum of 10%, right? So that obligation has to be met. Remember when we said if you do not comply, we'll make it hard when you not complying. That's when those penalties come into place. If you want to deregister for PAYE, then you can do it via our e-filing system. There's an option on e-filing for you to deregister. Alternatively, there's an EMP 123 form that you can download off the SARS website, and you can book an appointment with SARS, or alternatively, you can send an email to contact us at sars.gov.za. And if you're an accountant, then you can use the PCC at sars.gov.za. Okay, this is for the deregistration process. Then we have the VAT. Now, you would have noticed via the budget speech itself, there has been some major changes when it comes to the registration for VAT. Okay, so prior to the latest budget speech, the there's two options when you were required to register for VAT. Now there was a voluntary where it was 50,000, where your turnover is likely to exceed 50,000, whereby you come into SARS and says, I want to register for VAT. I can prove to you that my turnover is exceeding 50,000. I'm doing a voluntary registration. Okay, and if your turnover is likely to exceed 1 million in any 12-month period, then it was a compulsory VAT registration. Now, with the new budget speech, effective from the 1st of April this year, uh, they have changed the voluntary registration and the compulsory registration. So, if you will start with the compulsory, if your turnover is likely to exceed 2.3 million in any 12-month period, then it's compulsory. You have no choice. You have to register for VAT unless you are an exempt supply. That means you exempted from registering for VAT. Okay. Or alternatively, if you're not meeting the 2.3 million, but you can prove to SARS, you know what, I have taxable supplies that are more than 120,000, and I'll reach that in any 12-month period, then you can come through to SARS and prove to SARS that you would want to register for VAT. Now, if you are registering for VAT, this is where you will need to decide. If you're not making the 2.3 million taxable supplies, then you shouldn't, you're not required to be on the VAT register. Understand? Unfortunately, if you choose to be on it, then remember every invoice that you'll be issuing out, any sale that you make, you need to actually cater for the VAT on it. Okay. And once you actually charging VAT, that VAT that you are charging is what you'll be liable to pay over to SARS. However, in your business itself, you are also buying supplies, okay? And the suppliers that are also charging you VAT, then the VAT that you are paying, you are allowed to actually set it off with the tax or the VAT that you're required. So that's where you're looking at your output and your input tax, right? VAT alone is a separate topic on its own, and we can take you deep into how VAT will work. But if you are considered at a VAT vendor, that means you have a VAT number, you'll be issued out with one. Um, you need to submit declarations. Now, depending on your categories that SARS issues out for you, you could be submitting every month or every 2 months, right? But your VAT returns need to be submitted. So the declaration that you need to submit on a monthly basis or every 2 months is called a VAT 201, right? That needs to be submitted on or before the 25th of the month. If you are on e-filing, you can submit your VAT 201 online, okay, and that you have until the last business day of the month, provided you're doing the declaration via e-filing and you're making payments via the e-filing system as well. Failure to do so, if you don't make the 25th or the last business day, then uh, SARS will impose a 10% penalty if there's an amount liable to be paid. Okay, payments has to be done either on or before the 25th of the month or the last business day on e-filing. One thing we also need to consider is that sometimes your business is going to go down and you're ceasing to trade. It's no longer uh, a viable business. You are still required to file your returns up until the time your business ceases to trade, but also you need to inform SARS that you're no longer trading and you will be required to deregister for VAT. Now, what you also need to do is consider that when you started the business itself, you might have actually bought a lot of equipment or you bought a lot of stock. And when you did that and you registered for, and you was a VAT vendor at that point, uh, you claimed back all the VAT on those items, all right? So when you are exiting the VAT system, then you need to consider the exit VAT that you might be liable to be paying as well. Okay, so if you want to deregister for VAT, make sure all your VAT returns are up to date. There's no amounts outstanding. There's a VAT 123 form that you download off the SARS website. You can book an appointment with SARS or you can send it through our email channels as well. Okay, now a lot of small businesses will run and they are not informed that there's a lot of incentives that are available for you. Now, the incentives was designed specifically on the small business range. And why we say small business is that uh, when a small business operates, one thing that they're doing is they improving the economy, and also you actually creating employment, you sharing skill as well. So when government introduced the small business incentive, small business corporation, we looked at rules that were needed to be put into place that in order for you to qualify for these, you got to meet certain requirements. And if you meet those requirements, then you would basically have the applicable rates that you have a look in front of you. I'll give you a normal, straightforward example. Say, for example, you're a normal business and you made a profit, okay? And you made a profit about maybe 90,000 Rand for the year, right? So there's all your income, less all your expenses, and your profit was 90,000. And that's what your 27% will be worked out against. Now, if you had to look at 27% of the 90,000, you're looking at about 24,300 Rand of tax that you were liable to pay. But if you qualified for small business corporation rates, then you might have not been required to pay us tax because the small business corporation incentives, if you qualified for it, the first 99,000 is tax free, right? Now, the table you see in front of you is effective from the 1st of April 2026 and go up until the 31st of March 2027. All right. This is what we refer to as a progressive tax table. When we say progressive tax table, we are talking about the more tax you earn, the more you pay. So if you look at the first slide, so your taxable income from 1 Rand to 99,000 is 0%. From 99,001 Rand to 365, it's 7%. And then you look, it goes 21, 27. Okay. Now to get this rate, there are certain requirements that are needed to be done or met itself, right? Now, small business corporation, the incentive itself, you don't need to come to SARS and say, hey, you know what, I want to register for it. No, you don't need to. Uh, it's it's not a different tax type, but merely it's an incentive for you. All right. Also, to qualify for small business incentive, not more than 20% of your revenue may consist of investment income. So this is like interest or dividends or rental income, or if you have any royalties, right? And not more than 20% of your income is from rendering a personal service. I'll go into that shortly as well, what we're referring to. Now, who will qualify and how does it work itself? Right. So if you have a cooperative or private companies, your PTYs and your old CCs, it's applicable to you. If you are a sole proprietor, like an individual that's trading on yourself as yourself, then you wouldn't qualify. If you're in a partnership, individuals in a partnership wouldn't qualify. Trust wouldn't qualify. Because individuals itself, your tax rates are anything between 18 to 45%. Okay, and remember, we also have a threshold in place as well. Partnerships are individuals that come together. They form a common goal. There's a partnership agreement, and each one of them puts in their own expertise or investment into the business, and based on the partnership agreement they have a intake or percentage of the profit itself, right? So if it's individuals that are into partnerships, then they already on their own personal capacity they already have an effective tax rate, and then your trust have your flat rates of 45%, or alternatively you get special trusts that form within the normal individual rates, that's anything between 18 to 45. Okay. Then the shareholders in the company has to be natural persons. When we talk about natural persons, we're talking about human beings. The shareholders cannot be another company that's holding shares in that company. No. If it does, then you will not qualify for small business corporation rates itself. So the shareholders has to be held for the entire year, and it has to be by natural persons. All right. Now, the next one is that the shareholders to have no interest in any other company. So, what does ultimately mean is like we have this instance where we see a lot of small businesses being registered, and one individual might have five companies that are registered under his or her name. All right. Or maybe you have a friend that says, hey, you know what, I want to open a business. Do you want to be a partner in it? So we'll go 50-50. All right. So that means you associated with that business. Now, if you are a shareholder in any other business, or you're a director or member in any other business, then all your businesses that you are a partner to or have shares in will not qualify for small business corporation rates. So what they are doing, they are looking at a specific population of small businesses where the members are only solely concentrating on that business itself. All right. But if you belong to other businesses, then that business either needs to be dormant, or they need to be non trading or closed companies itself. All right. And gross incomes. Your gross incomes do not need to exceed more than 20 million per year. So a lot of small businesses don't even reach to 20 million. So this is just a tick list on how you determine whether you qualify or not. Now, remember initially I said you don't need to come through to SARS and apply for small business corporation. When your company returns are being done, your ITR 14 returns, the questions that you answer under the small business tab will determine whether you qualify for the small business incentive rates, or you'll remain on the normal tax rate at 27%. Okay, so whoever's doing your tax returns for you, how they answer yes or no on your company tax return will determine whether you qualify or not. Okay. Now, when we talked about investment income, we talked about dividends, rental, interest, royalties. And when we're saying not more than 20%, so we're talking about not more than 20% of your gross income must be made up of investment income. If it's more than 20%, then you won't qualify for the incentive itself. Right. Then personal services. Now, what we generally picked up, and the reason why they looked at personal service, the rule is that not more than 20% of rendering a personal service. If you're more than 20%, then it disqualifies. So, how does personal service work? Say, for example, I open up a business. Maybe I'm an electrician. I'm the only person that's working in that company. So, I'm rendering the personal service at 100% rate. Okay. So, what does it mean? I don't have employees, and I'm doing the work all by myself. So everything that I render or every job that I do, it's my 100% effort into it. So when they looked at the incentive itself, they looked at, okay, how do we encourage employers to employ individuals, and how do we then share skills and upskill uh, the employees. All right. So what they looked at is the employment rate. Now, what we're saying is that we want you to at least have three or more permanent employees. Okay. And those are permanent employees should be employed for you for an entire year. All right. But also we need to understand is that that three or more permanent employees shouldn't be connected persons. Now, we in most industries, we if we open up a business, the first person that we'll look at to employ is our family. But we're not giving anybody else an opportunity to get employed as well. So when they looked at the personal service, we say, okay, they when we look at what connected persons are, now we're saying we're not saying don't employ your family, but we're saying ensure that you have three or more unconnected people that's employed in your company. All right. And when we talk about connected people, we're talking somebody that's related to you in the third degree, like your mother, your father, your brother, your aunties and all. Yeah, you can employ them, but at least have three or more permanent employees that are not related to you. And okay. And also we need to ensure that those connected people, if you have them working, they're not rendering the personal service, because they will also be considered as rendering a personal service. So it's an important aspect to look at as well. Okay. If you qualify for small business incentives, if you meet the requirements and you meet all the checkbox, then you have what we refer to as an accelerated write-off of your machinery that you have in your organization. Like example, a write-off is like your wear and tear, your depreciation. Okay, so if that item was required to be written off over 3 year, over a 5 year period, you can write off that asset over a 3 year period. Okay, you can write off 50% in the first year, 30% in the second year, and 20% in the third year itself. Okay, all right. So then we also have another incentive for your micro businesses, and this is where we introduce turnover tax. Now, turnover tax is specifically, and yet again, I'm referring to a micro business itself. Now, let's reiterate how normal tax work. You're normally running a business, your income less your expenses gives you profit. Okay. When we're looking at your turnover, we're talking about your gross income without taking into effect any deductions. So turnover tax is a single system. It's a standalone tax system, and you would need to apply for it. Now, how it works is the following. If you're running a very small business and say, for example, hey, you're not into paperwork, you don't like keeping paperwork, and administration is too cumbersome for you. But you can tell us, hey, in this year, this is how much I made. So all SARS is worried about is what your turnover is. So if your turnover is less than 2.3 million, okay, then you can register for turnover tax, right? Turnover tax then replaces your normal income tax, your capital gains, dividends. If you was on the VAT system, then you can choose to remain on the VAT system, or you can actually then deregister from the VAT system itself. So as I say, you can be elected to be on it. Now, if you want to register for turnover tax, if it's a fairly new company, then the application needs to be done before the 1st of March. Now, turnover tax only works with financial years that are February. So if you maybe on another financial year and you say, you know what, my turnover is like maybe R1 million every year, for example, and I'm paying tax on the normal tax system. Maybe I should then register for turnover tax because I see the benefit of it, right? But if your financial year is anything less than a February, then you'll have to go to CIPC, amend your financial year, and then only if it's a February year, and then we can do so, right? So this is where you need to physically do an application itself. If you open up a business during the course of the year itself, you need to ensure that you register within 2 months of that business being registered itself. Right? Now, there's a quick test that you will need to do to see whether you qualify for turnover tax. So if you go to the SARS website, www.sars.gov.za, you click on the small business employers link, and then you click on turnover tax. You scroll down, you're going to look for how to register, and there's a quick test. How you answer yes or no um, on that will determine whether you can qualify for turnover tax or not. As soon as you answer no to any one of those questions, then automatically you are disqualified for turnover tax. Right? Now, the application form, it's the TT01 form. That form is available on there's a link on our SARS online query system that you can click on and submit the application online. The online application is the preferred application. However, you can go onto the website itself and you can download an online form or a manual form, complete that, and you can book an appointment with SARS and you can submit that application via SARS. But the preferred method is do the application and upload your supporting documentations online. It saves you from coming into a SARS office itself. So who will qualify? It's businesses with a qualifying turnover that's less than 2.3 million. All right. So the tax-free threshold will go to the table has now been adjusted up to 600,000. So what does that mean? The first 600,000 of your turnover is tax-free. You don't pay tax on it. But it's a choice that you need to make as a business owner. Remember, if you're having a business and you can see that, you know what, every year that you're making a loss, right? Then remain on that system. Say, for example, every year you're making a loss and your gross your turnover for the year was 600, say 800,000, for example. All right. And with your expenses, you always were in a loss status. If you're in a loss status, remain on that system itself. However, if you're looking at where your turnover is less than 600,000, then you can choose from effective from the 1st of April. This is where the new rates kick in to be on the turnover tax system, right? So the first 600,000 of turnover is tax free, right? Turnover tax applicable to individuals, you and I, anybody that's in a partnership, companies and cooperatives, right? So there's no restrictions on it. The only entities that are excluded is like your public benefits organizations, your recreational clubs. Remember, these organizations already have what we call special tax treatment because they are exempt from tax. And they are like the PBOs are exempt from tax. They don't pay income tax itself, right? So turnover tax is a choice, but you need to really sit to see whether you will benefit from remaining on the normal system or moving over to turnover tax itself. If you're in a partnership, like you have four members that open up a business and you're in a partnership, you'll have a partnership agreement itself. Then each partner will need to register for turnover tax themselves, provided that their turnover does not exceed 2.3 million. Remember, each partner is required to file his or her own income tax return itself. Okay. Now, if that person is in one partnership, they cannot be in another partnership as well. Then they'll disqualified for that. Okay. And that partner cannot hold shares or interest in any other companies, close corporations, or cooperatives itself. Right. And at all times, all the partners need to be individuals, natural persons. Okay. Also, same rules apply to your small business. They shouldn't hold any interest in any other company. The investment income, the 20% that we spoke about, and also the 20% of rendering a professional service as well. Okay. When you're looking at disposal of capital assets, if your capital assets exceed 1.5 million in a 3-year period, then you'll disqualify from turnover tax itself. And if you are considered as a personal service provider or a labor broker, you will be disqualified for turnover tax. However, if you're a labor broker that has or is in the possession of a tax exemption certificate that's been issued by SARS, then there's a rule to that as well. Yet again, all members and shareholders must at all times be individuals. Okay. Now, this is where you sit down and you see the decision making factors, right? If you're feeling that your administration is too much, okay, and you can't keep records and you're losing invoices and you don't have a proper invoicing system in place, okay, then you can consider moving over to turnover tax, maybe based on the qualifying criterias, right? Remember, the current system could be too technical and difficult for you to comply. For example, it might be too expensive, or you might not know how to file an income tax return. So it might be expensive for you to appoint an accountant or bookkeeper, because turnover tax is much of a simpler process. You just complete uh, um, the every 6 months you submit your TTO2, and then you do a TTO3, which is your annual tax return as well. Okay, maybe your business is very small and it's too costly to appoint an accountant, then you can consider that as well, right? And as I mentioned before, if your business, your current status of your business is you're getting a loss, and it's better for you to stay on the current system if you're currently on a loss. But remember, if you go on to turnover tax and we disqualify you, then you cannot re-register for turnover tax. There's a 3-year waiting period for that. Okay. This is the turnover tax rates. It's effective from the 1st of April up until 31st of March. It's the first 600,000 of turnover is tax free, and anything from 600,001 rand to 950,000, it's 1%. 950,001 rand to 1.4 million, it's 2%, and anything above 1.4 million and 1 rand is 3%. So it's a deciding factor. You decide which will be better for you. This is just an overall comparison on how the different tax rates work. For example, if you're an individual and you're doing personal income tax, and say, for example, your taxable income was 420,000, okay, that 420,000 will fall at the 31% range, and you would normally be required to pay a tax of 91,437. If you're a normal company and your profit was 420,000 and at the flat rate of 27%, then you would have paid a tax about 113,400. And if you had small business, if you qualify for small business corporation, then that 420,000 will be your taxable income, and you would fall in the 21%, then the tax that you would have been paying was 30,000. So you can have a look that if you qualify for small business corporation rate, you're actually like close to about 80,000 you are saving in taxes, but that's if you qualified for it. Okay. Then if you applied for turnover tax and if you was approved for turnover tax, and if your sales was 600,000, okay, then remember the first 600, anything above 600,000 is tax free. So you wouldn't have, if you was in a turnover tax system, pay tax on that 600,000 turnover because it's null. Okay. So as soon as you went above the 600,000, it will go from 1%, 2% up to a maximum of 3% itself. So something to consider as well. Then the main idea of tax compliance is to ensure that one, you are registered for income tax. Two, that you do file your income tax returns honestly, accurately, all right? And you are not trying to evade tax by declaring the wrong information itself, right? You need to ensure that your tax returns are submitted on time, so that you don't get penalties. Now, SARS will issue out penalties for late submission of tax returns. So if your ITR 14 tax returns are filed late, your penalties can range anything from minimum of 250 Rand per return per month up to a maximum of 16,000 Rand per return per month. Okay, so what's advisable? As soon as you file your income tax returns to SARS, you are assessed. You are required to keep the supporting documentations for a period of 5 years. Okay, so if you are non-compliant, there are a range of penalties that you will get. If you submit late, you get a late submission penalty. I've explained the penalties if you submit late, 10% on VAT, PAYE. If you're submitting your recon late, your EMP 501s late, it's 1% of your PAYE liability per month, up to a maximum of 10%. Remember, over and above the penalties, if you have an outstanding debt with SARS, then you will be charged interest on it. Now, if you are declaring information that's incorrect or underestimating to SARS, there is a potential of us to impose up to a 200% penalty. So be mindful that when you're doing declarations to SARS, even though you might not be in the finance background, but you must have an understanding. Remember, when you are signing off your annual financial statements, you are signing off to say that you agree to what has been put onto that financial statement. Okay, so you're saying I'm agreeing to it. And if that financial statement is incorrect and SARS has picked up maybe you haven't declared the correct income and we raise an assessment for you, there is potential for us to issue or impose up to a 200% penalty. Okay. Also, SARS has our e-filing system. It's an electronic system that's available. It allows you to update details, register for VAT, PAYE online. That means you don't need to come into a SARS office. You can file your income tax returns, your company income tax returns, your VAT, your PAYE, your customs. Everything can be done online, which means leaves little room for you to walk into a SARS office. But even if you come into a SARS office itself, you'll have to book an appointment. We work by appointment basis only. So if you are registered for e-filing, all right, you get a username and password. Do not give that information to any third parties. If you have an accountant that doing your books for you or doing your submissions for you, your accountant will not request for your username or password for e-filing because they themselves have their own e-filing profiles. They got a practitioner profile where they will load you as a client and you will just authorize the transfer or activation of the tax number because you're authorizing that you are appointing them to do your taxes for you. Okay. If you feel that your e-filing username and password has been compromised, then you can reset the password or you can contact the SARS call center and they can assist you with this. All right. Remember, SARS does not charge you for any of the services that they rendered. Right. Even if SARS comes to your offices for an audit purposes or verification or anything, we will always carry identification to identify us, and you can also verify our identification as well. Okay. Uh, if you have an accountant that you are dealing with, they should be registered with a controlling body, right? And if they're registered with a controlling body, then they apply to be registered with SARS as a tax practitioner. They have rules that they would need to follow, uh, and you would request for a practitioner number from them. That practitioner number can be verified online, either on the e-filing system or on the SaaS system directly. Uh, Reason why we say verify whether your accountant or bookkeeper is a registered tax practitioner is to make sure that they are aware of any changes or amendments to the law. We have a lot of issues where we get a lot of fly-by-nights, and it's very hard for us to identify them. But you, before you appoint them as a bookkeeper or accountant, uh, request for their tax petitioner number, see whether they valid or not. Because if they don't have a registered practice number with SARS, then for some reason there's a reason why they haven't registered. Maybe they're not affiliated with the controlling body. Maybe they're not qualified. But it's your tax affairs. You need to take responsibility for it. Okay. Supporting documentations, keep your supporting documentations for a period of 5 years. You need to keep it most probably in its original format. So we always advise if you have invoices that you claim deductions against, make copies of them, scan them, save them onto a cloud or an external hard drive. So if SARS requires copies from it, we can request for copies for the last 5 years, but you must be able to provide us with those copies itself in its original format. If not, then we can disallow any deductions or claims that you have put through. Okay. This is our digital platform available for SMMEs. Um, if you are a registered company, you've got the SARS online query system, you've got the SARS e-filing system to work with itself. If you're an individual, right, then you have e-filing, you got the SARS online query system, plus we've got the SARS Mobi app. So you can download the SARS Mobi app. That's applicable specifically for individuals only. Maybe in the near future, if we advance the system, we might make it applicable to companies as well. Okay. SARS has gone digital. Now, remember, initially I said, you know what? If you're an employer, you need to have income tax numbers for all your employees. Now, if they are registered, if they have a valid, if they cell phone number and email address is matching what SARS has on their system, then they can use our SARS USSD option, which is *134 *7277 hash, and they can request for their tax numbers there. If you want to book an appointment with SARS, you want to get your text numbers, you can use your SMS functionality, which is 47277. Or SARS also has a WhatsApp line as well, which is 0800 117 Just say hi or hello, and then what will happen, it'll come up with the information or a menu. Now, one thing we need to do is remember we're going to validate the person uh, that's using the WhatsApp line or the USSD option. So, example, if my cell phone number or the WhatsApp number that I'm using on my cell phone is not affiliated to the WhatsApp number or the cell phone number that we have on the SaaS system, then it's going to give you an error to say that the details do not match. All right. What does that mean? That means you will have to come through to SaaS and update either your cell phone number and email address to utilize this functionality itself. Okay. Then we have our SaaS online query system. It's a system that's been designed just after COVID, where we put a lot of frequently walk-in queries that we get at the branch, and we put it onto the SaaS website. So if you wanted to register a tax number, upload supporting documentation, uh, uh, update registered representative details, then we put it on the system itself. You click on it, on the link, you complete the information, you upload the document, you send your query online to us, right? And then you get it takes within 21 business days for them to work on it. And then we have our SARS Mobi app, advisable for individuals to download. And yes, SARS has gone AI as well. So we also have an AI assistant on the SARS website itself. What's also good about it is that there's a lot of information on our SARS website. SARS TV is a YouTube channel as well. There's a lot of videos that's online on SARS TV that talks about how do I register, how do I get tax numbers, how do I file provisional tax returns, what is provisional tax. So there's a lot of information available online for you to then look into and utilize just to empower yourself as well. Okay, so maybe I'll leave the screen up for a while, right? Other than that, I am done for on my presentation. So thank you very much for allowing me to address you. This interaction that we've done with Vishal and his team, It's something that we want to do on an ongoing basis, but maybe Vishal will take you all deep into that as well. So thank you very much and for the opportunity and to address you all. Thanks, Vishal and your team.
Martin, thank you very much for what I would say was a very, very comprehensive, high-level overview of business tax obligation. Very comprehensive indeed. Going forward, I know that we would delve deeper into some of the additional topics that will impact, businesses. So members, please do look out for that. This is the time where you have the chance to ask questions. You can raise your hand, or like we said, in the chat box, submit your question in the chat box. There is one in the chat box at the moment. Martin, if you could respond to that one, it's from Johan. It says, on COIDA returns, what is the new ceiling limit for 2027?
I think quarter returns are most probably done by Department of Labor. We don't cover that, Vishal. So it's a Department of Labor. But if it's specifically on the tax returns, for income tax, then we can be able to hide it. But the quarter returns is something that they deal directly with, I think, Department of Labor.
Okay, fantastic. All right. So Johan, perhaps you could raise that at the Department of Labor, or maybe through one of our IR specialists at the RMI. They may be able to assist with that query as well. Are there any further questions? I don't see any hands raised. My team that's here in the meeting, please help me. I don't see any hands raised at the moment. Am I correct? Okay, there we go. There's another question in the chat box. And that is what to do when SARS request an audit for 11 or from 11 years ago.
Okay, thank you, Janine. So when we're looking at 11 years ago, then there could be, depending on whether it's a VAT, whether it's income tax, whether it's PAYE, but it all depends on what triggered that audit. I'll give you some examples that off my mind, right? If it's, for example, PAYE, it could be maybe where the employer provided, for example, an employer provided vehicle. Now, I'll give you an example, right? So this is where this is getting into how SARS will think. Uh, Maybe there's a company vehicle that's only driven by the director, but they're claiming it as a right of use of a motor vehicle. Understand? Now, a right of use of a motor vehicle is for PAY purposes. It's a fringe benefit. So maybe they're looking into something like that, whereby they're looking at the company is claiming it as a company vehicle, but that vehicle is only used by one person. They're claiming a deduction for that. A VAT could possibly be VAT returns that we submitted that there's discrepancies and they're looking 11 years ago. So and for company income tax, almost the same. They're looking at overall deductions or risks that would have been picked up in the current submission compared to the previous years. The only thing that if it's 11 years later, and for example, in this type of scenario, SARS is informing, please provide supporting documentation or keep supporting documentation for 5 years. And if you cannot provide that information, then unfortunately you need to inform that we don't have records. Either you moved office or you're destroyed or you don't have the copies on hand. Okay, so I hope that helps you, Janine, on that. I'll look at Nivashni's thing. Only a monthly basis we use casual labor. We pay for these via petty cash. Do we, as a company, have to pay PAYE on this? Okay, Nivashni, we need to just look at two things. Remember, we have an income tax threshold. We're saying it's 99,000 for the year, right? And then if we divide that by, say, 52, we're saying about you're paying a salary, a weekly wages, for example, casual wages of less than 1,903 Rand. Okay. However, remember, you are doing one thing. You are claiming for PAYE. PAYE will only be deducted as long as you're paying above the threshold. So on that basis, no, there wouldn't be any PAYE if it's below the threshold. However, it is very important that if you are taking on casual labor, you're also claiming that wages on your deductions on your financials. But you need to actually make sure it balances off, because if you're not taking in consideration your them on your payroll system, even though they are a casual employee, then you're not going to balance off. So I see that you're saying you're paying them via petty cash, but my question is, you're paying them monthly. Why not put them on your payroll system and ensure that the payroll system runs through that? Okay, it's advisable that you can do that. Uh, Nomatandazo, can we claim tax on petrol? Now that's where we need to understand. Uh, when you're saying tax on petrol, can you be more specific? You can maybe unmute and maybe let me know about which way you're going through, because I'm looking at maybe you on your personal capacity or in a company capacity. Maybe you want to explain that, Nomtandazo?
Good afternoon, everybody.
Afternoon.
Um, yes, it's Namtandas. No, I wanted to find out, it's actually in general in terms of your input and output tax. And then in that instance, can you claim it back when you do your filing?
Remember, is it petrol that you?
Petrol that
Uh,
you consume as a logistic company because you're
right.
always on the road. Yes.
Okay, so basically, does maybe you have a lot of trucks that you're running. Remember, the
Yes.
petrol is zero rated already, so you're not going to be able to take into consideration on that. So the petrol is already zero rated. So even though if you've declared it, there's no VAT that you're paying on the petrol itself. Understand?
Okay.
Yeah. Okay. Tapelo, go ahead. You can unmute yourself, Tapelo.
Good day, how are you?
Fine, thanks, and you, sir.
I'm good, thanks. Thank you for having me. I just want to find out about the small business incentive. How do we register for one?
How do you receive?
How do we register? Like, how do we become part of that program?
Okay.
Or
All right. So the small business incentive, Tapelo, I've covered the requirements, all right, or for you to qualify for it. So you, on the income tax return, which is the ITR 14, so the company tax returns, in the company tax returns, there are built-in questions on it that you need to answer. Okay. Remember when I talked about, are you a natural person? Do you have more than three permanent connected persons? Is your turnover less than 20 million? Uh, if you meet all those requirements, then automatically on your tax return, you will qualify on assessment to be having the small business rates. So when or whichever accountant is doing your tax returns, or if you're doing your tax returns yourself, you will find that one of the questions on the return, so it's called a wizard when you're creating your return, will ask you, are you considered as a small business corporation? When you answer yes, then you answer all the follow-up questions after that, and then you'll qualify for that incentive, sir.
okay, okay. The thing is,
Thank you.
attending another tech webinar. So they were saying if you hire people, then they give you a portion of the teacher, something like that. I just wanted to make sure it's quite clear with this.
Can you just repeat that? I do apologize. The line is like echoing. Can you maybe just repeat that for me, please?
Okay, I was asking if does it not involve hiring maybe disabled people or maybe just a youth whereby you give them work experience and then you will be allocated a portion of their future money or something like that.
Okay. So I think, Tapelo, you are referring to uh, the incentive. It's called learnership allowance. That's a Section 12H learnership allowance. Is that where are you referring to individuals that have a disability or normal individuals that don't have a disability that get further incentives? Is that the one you're referring to?
No. They were saying like on that webinar, there's a small business incentive whereby you become, I don't know how they manage your tax. So when it's like when you hire, it works sort of like a DEE. Like when you hire disabled people or you hire maybe like a youth, then you'll be allocated some portion of
Okay.
them.
Okay. Okay. I understand where you come from. So what you're referring to is called employment tax incentive, whereby if you employ youths that's
Yeah,
between a certain age, so it's between, I think it's 18 to 30, 29, I think, right? And there are certain requirements that you need to make, that you pay them a certain amount of salary, and then the qualifications of that they get what we call, you're allowed to claim for a deduction on a monthly basis on your PAYE. So that's called employment tax incentive. That may be a topic that we should cover for y'all as well, whereby it's an incentive based on for youths. It's a
yeah,
youth and what South Africa youths are not somebody that we consider up till about 20 something. It goes to
yeah,
higher, right?
yeah.
So it's a tax incentive. It's there to promote employers from employing youths in South Africa. There is a qualifying criteria on that as well. There's a basic amount that you need to pay to them as well, and the employer gets an incentive. That incentive scheme will be for 2 years for per employee. So it's called employment tax incentive. Okay,
Okay.
so there's other incentives. I've just mentioned the employment tax incentive, but I also discussed which is Section 12H, which is also the learnership incentive as well. So it's another topic that Vishal and his team we can put together as well.
Okay.
Thank you.
Not so much. Yeah.
Okay, Tapelo, some very good questions there, I must say, albeit the line was a bit difficult to get through, but we got the message across, and certainly on the last point, regarding a youth employment incentive, I don't think many of our business owners completely understand what that would mean. So, Martin, definitely something to consider in terms of a future topic. I see there's no further questions in the chat box, nor are there any hands raised. Perhaps at this point, then, what I want to say is, Martin, thank you very much for presenting a very comprehensive overview. I think what is clear from this exercise is the need for more education on specific topics, and we will definitely schedule future sessions with you, Martin. And to our members that participated today, I think you realize the value of these sessions. It has the impact of helping us as business owners understand some of our tax obligations, understand it better, and not just entirely trust the system as it would present it to you. Have a good understanding of what your obligations are, and certainly, in terms of navigating the territory through SARS themselves, they guide you in terms of what is permissible, how you can navigate it, identify some of the incentives, and utilize some of them. So definitely very valuable session, Martin, from our side. Thank you very much. If there's no further questions, I'm happy to then terminate today's session. And we will keep you posted through Mariki and the TEPA office in terms of the future sessions that we will set up, on this particular education series. So thank you very much. Have a wonderful afternoon. And once again, Martin, thank you very much for your time. And to our
You're
members
welcome.
that participated, thank you very much as well.
Thank you.
Cheers and out.